Today, we'll be taking a look at a 15-minute crypto trading strategy. Before we do, though, I wanted to put the testing scoreboard up for everyone to see. So if you're new here, we test strategies and indicators, see if we can find the best strategies, the best indicators for trading in general. To date, we have tested a total of 53 different strategies, with 15 of them being profitable. We've also tested a total of 743 indicators, with 296 of them being winners. The best ones so far were able to achieve a 100% win rate. Now you need to go back and watch those videos to understand the context of how they were able to achieve that. So go back and watch those videos and see what you can get out of those winning indicators. We've also retested in the advanced testing 6 indicators, and 3 of them were able to maintain the winning status, with the best one able to maintain a 64% win rate. Now, keep in mind that we test most of these strategies and indicators on the Forex and crypto market, but they can be applied to just about any market universally. Okay, so today we are looking at a 15-minute crypto trading strategy. The foundation of the strategy revolves around what's called inventory retracement bars. And you can see these triangles here, these green and red triangles above and below price action. Ignore that for the moment there. That is not part of the indicator. The indicator, again, just has these points here. I think by default, it actually has like a line also running through it. Looks very similar to like a moving average, but I turned that off just to leave these triangles here. And these triangles indicate any bar, any candle that opened, came down, and retraced itself at least 45%. And so basically these triangles are notating kind of areas of buying pressure or selling pressure. And so what we are getting is the bar opens, it comes down, and then, for example, gets bought up into this area. And then what we are looking for is when we get a break of the low of this candle, generally you will get like an explosive move, because a lot of people were buying into this expecting it to go up. When it breaks the low of this candle, they either exit their positions or their stops get hit, and so therefore it adds to that pressure to the downside, kind of getting a strong move down. And on the reverse side, it would get a strong move up in that instance. And so that's kind of the again the foundation, the theory behind what we're doing here. And so the inventory retracement bars, you can find an indicator for if you just type in Rob Hoff, H-O-F. It's this one right here, Rob Hoffman's inventory retracement bars by UCS Gears. Again, you put that on screen, and again, I did turn off this price line right here just because it kind of muddied up things, and you get this right here. The next piece of the puzzle is that we are going to use 2 EMAs. Now, again, this strategy was created by Rob Hoffman, and all these kind of parameters were set by him. And supposedly by the original video that I got this from, it wasn't from Rob Hoffman. It's another channel that tested this and got really good results with it. And now we are just kind of confirming if that is the case and if this is a decent strategy to use. In that video that I pulled this from, the creator there again said that we use these 2 EMAs here per apparently Rob Hoffman's strategy. The first one is a time frame of 1 hour, a length of 20, and the other one is a time frame of the chart, 15-minute time frame, length of 20, and we get this here. And so, like most moving averages, what we're looking for is when the faster moving average, so in this case the blue one, is below the green, then we are looking for shorts. Anytime we get an instance where the blue faster moving average is above the green, then we would be looking for long trade opportunities. And so pretty simple setup. We mostly know that. And so another aspect of this was that the original video said that you need to take into account the trend angle. And so, excuse me. And so supposedly in that video, the Rob Hoffman claims that if the moving average isn't at a 45-degree angle during the time of the signal, then it's an invalid signal. But in that original video, he was not measuring the angle of the moving averages. There were quite a few instances where he definitely was not at a 45-degree angle. And going through this strategy, it's kind of rare that you find a 45-degree angle in the moving average. Just doesn't come up that much. And so again, we're kind of testing this based off of what the original video said. And so in my opinion, it looked like for the most part, it was around a 20-degree angle, give or take a few degrees, up to whatever the sharpest degree is that it could go to, up to that 45 or more. And then on the reverse side, of course, it would be the same, just in positive instead of negative to the downside. That little angle tool there you can find right here with the lines and such. It is this trend angle tool right there. You just click on it, then click on the screen, then drag that little line out to wherever, and then you can grab that line and move it around, hold it with your mouse, move it to whatever angle you want it at. So, all right, back to the strategy here. So whenever I did this testing again, the angle was at least around a 20% or more is how I did it. And so if it was less than, say, like 18, then I wouldn't do it. And so what we're looking for are instances where we get the formation on the downside of a green retracement. And so the green triangle that forms on a bar, we are looking then for a break below that low, as I said a moment ago. And so basically what you would do is when you get a formation, and this, I use this one as a valid one also. If it had one on top and bottom, I still consider that a valid one. And so when we are looking for shorts, we're looking for the green arrows, not the red ones. If we were looking for longs, we'd be looking for the red arrows, not the green ones. And so in this case right here, we get a green arrow that forms right there. And then we would have the low right there of the bar. And what we would have is we would have an order, a sell order placed at that low. And then if that low gets broken, it would enter us into a trade. And then we would do, as per the video that I pulled this from, a 1 to 1.5 risk reward. And so here we would go right there, and the stop would go at the top of the signal candle. So the candle that has the retracement triangle on it, it would be at the top of it, again, because we're on a short. If it was long, it would be the bottom of it. And then we have this set to a 1.5 risk reward. That's 1.47, but whatever, it's close enough. Then we would just ride this out and see what happens. It either gets stopped out or it comes down and hits our take profit. In this case, it came down and it hit our take profit. Now, one thing that I did do during the testing was that if we got the formation of one of the retracement bars, like right here, and it was not triggered, then I would continue to, and a new one was formed, like right here, then I would continue to jump the retracement bar. So this one would be canceled out. This one would take its place now and continue to do that over and over. Now, actually in this case, it was broke and triggered right here, and this would have resulted in a stop. But that's just an example of one of the things that I did. So let's jump over here and see if we can't find an example of another short here. So here is an example. So we get a push down here. Our angle on the moving average is around 20%, which I found to be relatively normal on these decent moves. We get a formation of the retracement bar right here, and then we go along, and the low isn't broke here. Then we form this one right here. And so this one would now take its place. I would cancel the order here, the sell order, and I would place it on this one right here. And so we would then have this as our new signal candle or bar. We get the break of it on the very next candle right here. And so we would set our short position right there. The stop again would be at, oh, come on. There we go. That's what I'm looking for. Stop would be right at the top of this candle right here. We'd have a 1.5 risk reward. Again, 1.47, close enough there. Get us to our measurement, and you see that we get a push down here and we hit our take profit. And so that is the strategy in a nutshell. That was how it was described in the original video. So let's go ahead and we will fast forward through the testing process that I did. So that way you can take a look at that real quick, and then we'll pick it up on the other side to take a look at what this was able to achieve over the 50 trade test. All right, before we take a look at the totals, I want to give a quick shout out to our Patreon only channel on our Discord server. This is our Discord server right here. This is our Patreon only channel just for our patrons. We put a lot of great information into this area for our patrons to take advantage of. This is Sasquatch. He is an amazing Forex prop trader doing daily Forex analysis. Really great stuff, throwing out a lot of great information here for people to take advantage of. Our admin Jay is also posting regular futures analysis and trades that he's taking. Myself, I'm doing day trading on the S&P 500 and throwing out all my trades in real time for everyone to take a look at. And if any patrons are interested, you can also get a short one-on-one session with either myself or with our admin Jay to answer any questions you might have or help advance your learning process in trading. And so again, a lot of great information and benefits to becoming a patron of the channel. Highly recommend you check it out. All right, so what was this able to achieve over the long run? So again, we did 50 trade tests, and out of those 50 trades, we got 29 winners, we got 21 losing trades. Now my numbers here are based off of if you were our risk reward was 1 to 1.5 risk reward. And so if with each trade you were risking say $100, that means that your gain would be $150. And so if we were to take those numbers with those, kind of minuscule amounts there that are relatively easy to fund an account with just a couple $100 and try this strategy, then in this case your total gain would have been $4,350, and your total drawdown altogether would have been $2,100, and you would have had a total gain for about a month of about $2,250. Now, of course, you're going to have to account for some of the losing trades that will take place. And so throwing just $150 into an account and hoping that you're going to get these kind of results aren't exactly realistic. Maybe if you had, say, $700 or something, $1,000 to throw into an account. And then also keep in mind that a lot of places do give you leverage, and so you can also account for that as well. But all in all, a pretty solid strategy. Seemed like it worked rather well. Got quite a few wins and a decent gain. So all in all, like I said, really solid. Can't complain too much about that. Highly recommend that you check this one out, play around with it, and see what you can accomplish with it. So that's going to do it for this video here. I will see you on the next one.